Time for the market report, a turnaround this week.
Yeah, we'll see how long this one lasts, Mike. Also, this month's WASDE report and more. But first, the numbers. What were the week's biggest gains and losses? And then, this month's WASDE report, what did it have to tell us? And finally, more cattle market talk with Dr. Josh Maples. What do prices look like for the rest of the year? So, markets closed on the upswing, all commodities affected save for one. Let's take a look. The week's biggest gain, lumber, up about 51.5 bucks. That's more than a 9.5% increase from the previous week. The week's only loss, live cattle, down 6 cents, more than a 2.5% decrease from the previous week. So this month's WASDE report dropped in, had a good bit to say about current production and stocks both domestically and internationally. In short, things are not looking too bad in row crops, especially wheat, corn, and soybeans. Livestock too showing some positivity. Here's what it had to say. U.S. wheat exports up due to strong sales, especially in hard red winter wheat. Ending stocks down and season average farm price $5.10 per bushel. Global wheat supplies up due to increased production. Consumption also raised mostly on feed and residual use. World trade up by 5 million tons and ending stocks up 4 million tons. U.S. corn beginning stocks projected up due to less use, particularly in ethanol. Production up by 72 million bushels, due mostly to higher acreage at record levels. Season average farm price $3.90 per bushel. Global corn production forecast down while exports increased, mostly from the U.S. and Zambia. Imports also raised and ending stocks down by about 1 million tons. U.S. rice supplies raised due to higher beginning stocks, imports, and production, up due to higher harvested area. Average all rice yield down 77 pounds per acre. Exports also down 3 million tons. Season average farm price $13.20 per hundredweight. Global rice supplies up nearly 1 million tons due to stocks offsetting lower production this year. Consumption up slightly and ending stocks up nearly 500,000 tons. U.S. soybean production up slightly due to more acreage but less yield. Crush forecast 15 million bushels higher due to exports. Ending stocks up 10 million bushels. Season average farm price $10 per bushel. Global soybean stocks projected lower along with production and crush. Exports raised mostly on meal exports. Imports also raised for Turkey, Brazil, Egypt, the EU, and Serbia. U.S. pork and beef production down due to less slaughter. Broiler, turkey, and egg production raised as indicated by recent hatchery data. Milk production forecast up based on higher cow inventories and more input per cow. Price forecasts for cheese, butter, and non-fat dry milk are lowered while whey prices unchanged. 2025 all milk price forecast $21.35 per hundredweight. U.S. cotton crop projected slightly higher due to both planted and harvested area. National average yield 861 pounds per acre. Stocks to use ratio at 26%. Season average farm price 64 cents per pound. Global cotton production forecast 1 million bales higher, while consumption also raised 850,000 bales, and trade up as well. Due to these factors, ending stocks are down. In our continuing coverage of the current cattle situation in the U.S., we continue our conversation with Dr. Josh Maples, this time focusing on beef prices and the risk of demand falling at some point next year due to these prices outpacing demand.
Yeah, really high prices, Zach, for cattle and beef, and so as you would probably expect, we've seen imports go up pretty significantly. Really strong beef prices pull in more beef. We've seen that. Exports are down, and so our imports, I think the most recent month, we saw imports up about 18% from where we were a year ago. Exports are down. So I think that has been a trend in 2025. Most of those imports are those lean trimmings. I mentioned that our beef cow slaughter is down, and so we're not processing near as many cull cows. That's really lean beef that we then mix in with the fatty trimmings coming off of our fed steers and heifers. We're not processing as many cull cows because we don't have them, and so we're bringing in a lot of lean trim from other countries to then blend with the fatty trim that we have coming off of our fed cattle. And ground beef demand has been incredible. So it's really strong prices. There's a need for lean trim right now, and that's pulling more imports into the U.S. And then our exports are down because we're just not producing as much as we have been. I don't see them going down anytime soon. The latest projections, we're going to have lower beef production in 2025 than we did in 2024. Looking out into 2026 at this point, we've pretty much already set the stage for an even lower beef production total in 2026. These tight cattle supplies, it takes a couple of years for that to turn into tight beef supplies. We're now realizing that in terms of what we're seeing on beef production totals. So we're looking at higher beef prices most likely for 2025, and even into 2026 we could see even higher prices. And from the producer side, I would suggest that if we don't see higher prices, then that becomes a beef demand question. Because right now we know we've got tighter supplies. Supply is going to be even smaller next year. And so if beef prices come down next year, even though you've got lower supply of it, then that tells us we've had some changes in beef demand. But right now, really strong beef demand, really strong prices. Consumers are seeing these really high beef prices, but so far continuing to move a whole lot of beef even at those higher prices.
And that's it for a deeper look into the markets.